everybody that's on. We may have some other people calling in. Welcome to the Foresight CPA Group coronavirus meeting. Let me admit some others. Couple housekeeping points is hopefully you can see my screen here. And if you have a question, if you'll hold those to the end, we're going to use the chat feature and you can type those in. We will have a Q&A at the end, and hopefully we can answer as many questions as possible or get back to you if it's a little more detailed. I have been reading a lot about this and talking with a lot of colleagues. Me and I and my partners have been discussing this, and we know there's a lot of confusions. These laws that came out regarding how to deal with the coronavirus pandemic have created a lot of anxiousness, I think, in the business community and in our country at large for employees and employers. So what I want to do during our time together, and I'm going to try to keep this to about an hour. This is meant to be a more high-level look, and with this, hopefully some more detail than maybe you've gleaned on your own. There's a lot of information out there. We're going to share some places we think you can go for, people keep coming in here, that you can go to try to synthesize some of this on your own if that's what you want to do. If you're one of our clients, then we would ask that you get with whoever you're working with as the main partner that you work with, and we will create a specific game plan for you. So let's start out. Let me back up for 1 second and just reiterate one point. And if you're a part of a specific industry, go to your industry website. A lot of banks are putting things on their website, and then SBA.gov has part of this on their website as well, or all of it, but part of it that we'll get into you apply for directly with the SBA, and then the other part you will apply with through a bank. And my goal is to try to simplify things. I am not an attorney, so I'm not attempting here, and we are at Foresight CPA Group are not attempting to give any legal advice. If anything comes up in the course of business in general that you think is a legal question, we definitely recommend that you consult with your attorney and the appropriate attorney in that situation. So as all of you know, the CARES Act was passed. It's almost a 900-page bill, and part of that bill provides for $350 billion in funding for small business. And the government knows that the federal government knows it needs to be working with the states and vice versa. So there's been a lot of people already laid off by the time this bill had passed. And there's some confusion out there as to the timing of what you should be doing, when you should be applying. Should I lay people off? Should I not? So let me first get into the main part of this bill. Someone else came on. So there's two main loans, and if you look, I'm gonna look at, you can go on your screen here. A sec. There we go. The first part of the loan packages that are available are an economic injury disaster loan, and often called an EIDL. And this is the loan, let me admit one more. This loan is you're going to apply with directly with the SBA. So you go to SBA.gov, and there now is a login at the top. There's a yellow ribbon at the top, and you can click it to apply. And before last week, you would have clicked a part of their website to apply, and you would upload documents, but it wouldn't give you a confirmation number. So now you get to apply directly. When you're done with the process, you will get a confirmation number. Some of the things you will need are how long you've been in business. You're going to need the ownership names of the company, and you're going to need the 12-month gross revenues going from February 1st of 2019 through January 31st of 2020. You'll also need to know how many employees you had, and it will ask for your cost of goods sold if you have that. And much of the information should be fairly simple from that point forward. I did find one part of the application process a little clunky, but that's to be expected as this keeps changing. And I think that's a big point too I want to reiterate is this is all a work in process, as this is a new law. These are all new laws, and everyone's waiting for more guidance. So part of this isn't, even though it's written and President Trump has signed it into law, there's not any regulations behind any of this. And so there are going to be questions that come up that we'll get to. So here's the clunky part though, when you apply for this, if you want it, and I'll talk about what this loan's for, is when it talks about who owns the business, it only lets you put in individuals. And at one part of it, when you log in, if your business, say, is an LLC owned by two S corps or two other businesses, you can check a part of it. One of the questions is this business owned by a business? If you put yes, which is correct, it only lets you enter one of those businesses, not two. And the only next step that you can do is enter individuals. So what we ended up doing is, in this case, for certain clients that wanted to apply, is we put one of the businesses, and then we just put the other owner that owned an S corp as an individual. We're waiting to be contacted by the SBA, and it will go to people's emails, we believe, as they need more information. So this loan, the EIDL, is part of it can be given as a $10,000 grant. And that will be considered a grant is if, when you go through the whole loan process, which you can't even complete full, you can start it online, you will be able to, if you want later, to finish the loan process. And these are the part of the SBA that were part of the typical disaster loan, as if a tornado went through your community and just your local area was considered a disaster area. What's happened with the coronavirus or the COVID-19 pandemic is virtually everywhere has been considered a disaster area, and that's opened up this type of loan to allow for some fronting of money quickly for those businesses that feel they have an immediate economic need to meet payroll, to pay rent, and just to try to get $10,000 into the pockets of businesses that need it immediately. This loan, to our understanding, can be, if you get a bigger loan, these loans can go up to $2 million typically, and they can stretch for 30 years at a 3.75% interest rate. However, keep in mind that on these loans, there is no forgiveness. This is not the part of the SBA loan where everyone's talking about having forgiveness of the loans. So if you start this and you're given $10,000 and then you move on to the next type of loan, that will come back into play. One more person to admit. So the big points here are on the screen. You can hopefully download this at our website, and just remember you have to apply for this directly or ask for help, but it's an online process. Let's go to the next. Okay, this is the much bigger loan that everyone seems to be talking about, and this is the part of the loan package that is not fully available yet, and it's coming. It's signed into law, but this loan is considered the Paycheck Protection Program, and there's a great PDF prepared by the U.S. Chamber of Commerce that I will reference. It will be downloadable on our website, and it is a really good resource that sort of walks you through everything, all these key points that I'll talk about. And to me, that was the most help if you wanted something just to read succinctly. But you can also go download the whole law if you like to read stuff like that. But that's why we're here, to try to help you sort through this. So some of the key terms that you need to be aware of when you're considering this loan are, one, it's eligible to small businesses and sole proprietors that have less than 500 employees. And that also includes all your 1099 subcontractors. So that's the businesses we typically work with, is small business. And that's who this part of the new legislation that's passed is geared towards. So the program has a number of different dates, and I think it's important that you keep in mind these dates as we talk about a few things. Scroll here. So there is a program covered period that really starts March 1st, and this whole program is effective March 1st through December 31st of this year, is what the CARES Act covers. And there's an application covered period that stretches back to February 15th. Even though you can't formally apply yet, there's some provisions that have us going back and making some calculations that affect this law, and it goes through June 30th. And then there is a forgiveness covered period when you start talking about your loan that could be forgiven. That starts from, if you're given this loan, starts from the origination date and goes for 8 weeks. And the really important part of this loan is to consider the maximum amount of the loan that you're able to get. And basically, it is your average monthly payroll, and there's some things that go into calculating what that is, over the last 12 months times 2.5. So we'll get into sort of that calculation, but it's, when you come to that number, it's 250% or 2.5 times that amount. The big thing to keep in mind is you're going to apply directly through SBA qualified institutions. So banks are starting to put things on their websites. We're noticing wherever you are banking, you should at least check their website. They're not even prepared yet to start accepting applications. So everyone can relax a little bit about, I need to rush out and get this. And I'll talk a little bit about maybe a strategy for not running out right away and starting to gather information and determining how much of this loan you can get and how much you really need. So let's, we're going to go back to this. We're just going to leave it there for a minute. So when you're looking at your payroll costs, the payroll costs are basically your gross wages. Move this so I can read. So it's your gross wages, salaries, and commissions that you've paid your employees. It includes vacation pay and paid time off. And it includes family medical leave or sick leave that they have been paid. Now, this is not part of the leave that everyone's heard about and we'll talk about later, that's part of, if you all scroll forward here, that's part of the Family First Coronavirus Response Act. That's a different part, but family leave has always existed. And so if you've paid that, that counts. It also includes your employer payments for group health insurance, but it does not include the employee portion if they're paying for some of that. And it includes the employer retirement plan match if you have a retirement plan. And if you have any also employer paid state and local taxes assessed on your employee compensation. And you can include payments to independent contractors up to $100,000 per contractor over the last year. But my understanding is that the contractors need to be individuals. It can't necessarily be business that you've paid. So we're looking at how we're going to calculate that more, but just keep that in mind. If you're paying, this is more looking at your payroll cost. Not that you paid somebody to come repair a roof and you sent them a 1099, but they function through being a roofer. And this is services that individuals, independent contractors are providing to you. So when you calculate that amount of all your payroll, you're basically divide by 12 to get a monthly average and then multiply by 2.5. That will determine your maximum loan amount. Now, how then, when you get this money, should you proceed? One, let's talk about the use of proceeds and how you can use the money that you do get. You're going to use it to cover payroll, other group healthcare premiums, interest on mortgage obligations for real estate, or if you have loans on equipment. You can pay rent, utilities, which include gas, water. There's a provision there for transportation that's curious, but then you can look at telephone and internet as long as the service was in effect before February 15th of 2020. So you can't go sign up for new service and then try to start paying for this new service. And interest on debt obligations that you had prior to February 15th of 2020. Here's a great part about when you get this loan, if you get this loan and when you get it through a bank, there is no personal guarantee and there's no fees associated with the loan and no prepayment penalties. So that is a unique feature of this loan that's not typical of other SBA loans that have existed. So when you get this loan, though, everyone's questioning, okay, but how do I get it forgiven? And I wanted to address one of the issues of debt forgiveness that I think it's important to keep in mind, and we'll talk about how this debt forgiveness is going to be calculated. One, in stepping back and looking at what the government is trying to do, and that's getting people back to work, keeping rents paid, keeping mortgages paid, and keeping money flowing, because everyone is right now sheltering in place. A lot of businesses have been shut down, and some more than others. There are certain industries this has definitely hurt more than others. And so if you get a loan, let's say you got a loan for $100,000, you used it appropriately, and let's assume all $100,000, for instance, was forgiven. You used it, and you could still deduct all of the expenses. They're valid business expenses that you're paying. Had you been given this loan, or had you not been given the loan and still paid all these, you would have no revenue and big expenses. And so that's the situation you would have been in, but that's unworkable for many small businesses. Excuse me. So by the government giving out this loan and allowing businesses to stay afloat and then forgiving the loan, that loan is not taxable to you, because if you had to include it in your taxable income, that wouldn't put you in the same spot that you were in before. So by forgiving the loan appropriately, it just helped you bridge that gap to get to more viable, back to normal, so we can be more viable. So the idea, though, is not to hand out tons of free money and have everyone go pay off all the debts and not hire people back. So what we have to do is figure out how to maximize your debt forgiveness. And once you get the loan, that is your origination date. There is no clarity right now on can banks, as they issue this, can you move the date of when you actually receive the money? Or is that just going to be something that is, your loan's approved, here's the money, and they put it in your bank account? We think there needs to be some strategy on, hopefully you can pick when you get that money so that you can decide when you want to, when you get the funds, you are actually able to be back in business or starting up again. If you're a restaurant, if you're a dental office, if you're a business that you've had a lot of people leaving, working at home, they're not doing a lot, or you've furloughed or laid people off because of this. Regardless of what business you have, you don't want to just get a loan if you can't be open for business. And now your 8 weeks then starts from when you get it. So we have to, though, wait and see what that guidance is on that part. So just remember, 8 weeks from when you get the money. You have to track from the date of receipt and how you use the funds. So here is a recommendation to make this more simple, and also to talk about maybe how to, this is going to require some more accounting, some more tracking that we haven't had to do before, or you haven't had to do if you're doing your own accounting. And that is, once you apply, talk to the bank that you're using, or it's probably the bank you're currently banking with. Set up a separate checking account and have them put the money into that. And don't put anything else into that unless it pertains to this loan. Use your other operating checking account to still collect any revenues that are coming in, to pay repairs or things that wouldn't be covered by this loan. The only thing that would run through the new checking account would be money in and then qualified expenses going out. Now, for our clients where we are helping process payroll, your payroll is already linked, if you're using direct deposit, to your current payroll account, or maybe your main checking account. Instead of going through the hassle of, okay, now I got to, for this period of time, move checking accounts where all the direct deposit links are set up, what we will do after each payroll is run the report that says, here's the total cost of everything needed, and we'll have you transfer money from the new checking account where the loan proceeds are over to your operating account. So it's a complete wash. And then, but if you're paying group health premiums, anything you're writing a check for, retirement plan funding, hopefully we can take these funds from this account. So you have one place where you're tracking everything being used by these loan proceeds. When you get to the end of your 8 weeks, we need to be ready to turn in proper documentation back to your bank that can be submitted to the SBA to qualify for loan forgiveness. And the way that they are doing this is, let's assume, again, you got $100,000, and let's assume you only spent $90,000 of it for whatever reason. That could come down to the fact that you didn't hire everyone back right away. It was a ramp up to get going again. And maybe over this 8 weeks, and that's why you want to time the receipt of proceeds, you weren't in full production again. So if you only spent $90,000 of it, then there would still be $10,000 sitting in that checking account. We then have to say, okay, the 8 weeks is up. How do you use the money? And turn that in. And then we'll get to what happens with that $10,000 if you elect not to pay it back and just pay off your loan. But for the 90,000 that you used, we have to determine what your full-time equivalent employees are. And there is an 8-week period after the origination period. So we look at your full-time equivalent employees during that 8 weeks. And then we got to go back and compare it to either the same period, February 15th of June 30th last year, or if you're seasonal or you didn't have employees at that time last year, we can look at January 1st of this year to January 29th. February 29th. And there's some calculations on how my question that in reading it, they talk about full-time equivalent employees in the law. Under the Affordable Care Act, you would calculate full-time equivalent employees using a 30-hour work week. So we have to equate your part-time employees, I believe, to a full-time equivalent. And there will be a calculation there. But the idea is if you've brought everyone back to work by June 30th and your payrolls come back either in full-time equivalent employees or and you've spent the money in a qualified way, your loan will be forgiven. If you have not spent the loan or used it, and let's say you only your payroll comparison and all these costs were half for easy math, then half your loan would be forgiven and the other half would roll into a long-term loan because you would have spent the money. But the terms on the loan are highly favorable and it allowed you to get back to work or get your office open again. So there's a few more details on this. Let's see how much time do we have. I want to get to a Q&A. There is an exception, though, that we need to consider. So this is a little wordy and sounds a little complicated, but we will work with you individually to formulate a plan on how you're going to reopen your office or get your business back underway if you decide to look at taking one of these loans. If from February 15th through April 27th, 2020, you laid off or furloughed your employees, and that's many people. A lot of our clients have already cut people back, put them on unpaid leave previously, or just people are sheltering in place. They don't want to come in, or they have varying circumstances. So you've probably already done this, and you are allowed to bring them back, and anything you paid during the 8-week period will be forgiven, even if you have a lower number of full-time equivalent employees, as long as you get that full-time equivalent back up to speed by June 30th. So there'll be a little customization to each client's situation to try to maximize your loan forgiveness. I will, in things I've listened to and read, and I think it's important to not play games with this. And that doesn't mean maximizing what you can do. Sometimes it's, well, why don't I just start hiring my family members and hiring other people? If they weren't your employee before, or you were never paying them, be very careful that, they have to be doing a valid job, and there are some limitations that we're not going to get into every detail on this webinar on if people are making more than $100,000, there's some limitations on how you reduce their wages and get everybody in a more even playing field as you're making these calculations within the wage limits that they've set. So let's just keep that in mind, that we want to be doing our best to maximize your loan while falling in a parameter where we can not be worried that we're going to run afoul of someone looking sideways at us because we were monkeying with the numbers. Okay. So, okay. phone there. I thought I heard her voice come through. Some of the questions we've had about this, some of the questions are if clients don't know when their business is going to be able to reopen. Right now, that's a big question for restaurants, and it's a big question for dental offices and other places that are completely shut down or highly limited on what they can do. So we don't know exactly when those dates are. We're hoping, as I said, that you'll be able to get some guidance from the state that you're in and know when you can reopen based on health guidelines, and then be able to time this loan with those things. And that's, again, why we don't need to rush out and just get a loan today, but we need to start getting some things together so that you're able to. I think it's important as well that you help your employees use the unemployment system. And the way the unemployment systems are working between the federal side of this law and the states have always had unemployment as well as the federal government, but there is a new $600 per week option that the federal government is overlaying on top of state benefits. It could add up to around $1,000 a week for people to be not working while you've laid them off. That that will be limited till, I believe, around July 31st. So people can't keep getting all this extra money forever. There is an incentive to get back to work. So it's really important to stay in touch with your employees if you've laid them off or furloughed them. Have a team phone call, have a group email, make individual phone calls if your circumstances allow, and make sure you're staying in touch with your employees so you have a plan and you know what their circumstances are to bring them back into employment. There could be situations, though, where people either can't come back, don't want to come back, or deciding to move out of state to be closer with family. I've heard a number of different circumstances, and everything is so varied. It will come down to just having an individual plan for your business and knowing how you can manage this. And then again, maximizing your loan forgiveness. Okay. Let's see. Couple things. Again, you're going to apply for this loan through your banks. It will be a streamlined process. You don't have to apply yet because the banks don't even know how to do that and the forms aren't out. This loan, the Payroll Protection Program, is part of the 7A program that the SBA has always had, and that is a big loan process. This is going to be streamlined. So we don't know. We had one client call and said, well, he's looking at the 7A app, and just don't worry about filling that out yet. Let the banks get ready, and we can start gathering some information that's needed for this. And some of that will be, if you're a client of ours, we'll have your payroll records. We'll be able to go back at any period of time and help you calculate your payroll so we can determine your max loan amount. We'll probably want to have, and we do have your payroll reports. If you are using Paychex, ADP, or some other provider, make sure you go gather your last 4 quarters, or even grab the last 5 quarters, and once they send you the one for the first quarter of this year, have all your payroll reports ready. Go back and get all of your healthcare invoices, or go back and look through what you've paid and go get those invoices so you can see who was paid and how much was paid. And then you want to also look at your employer costs for any retirement plan benefit that you've paid as an employer. And so we can get all these things together, start gathering your utilities, and those are pretty basic and easy to get. Just make sure you're not starting up new utilities now just to add them into the bill, especially if it's telephone or internet. These have to have existed. Again, there's going to be a lot of nuance to some of this, and we are waiting for a little more guidance. We don't even know, haven't seen the payroll forms yet, and how to apply for some of these tax credits that I'm going to talk about real quick here in a second. So some of the questions that come around this loan program, also people are asking, well, what if I have my employees and I have to pay for their paid leave? This is a it's a detailed and complex area. There's a great resource on the Department of Labor website. We'll get that posted on our website, and it shows you how to walk through this if you're having any of these issues with your employees. But this part of the Unemployment Act to help people goes into effect tomorrow on April 1st. And this is for your employees, anyone that's been laid off. It starts tomorrow and it goes actually through the end of the year. So people have been, and we've encouraged, especially if you're not operating, don't keep people paid, help them either put them on forbearance or furlough or terminate them so they can go to their state unemployment office and start making a claim. And if we're aware of one instance where a claim here in Utah was actually declined, and we're going to help look into that because I just found out about this. So I would suggest bearing with your state agencies, and just because something happens, don't freak out right away. Get with us, or let's work through this because this is causing an influx of applications. I have a stack of them right here from a client that we help with, and more things are starting to come in the mail because people are making these claims. But as of tomorrow, anyone that you have on your payroll tomorrow through the end of the year receives a benefit under the Families First Coronavirus Response Act. And there is an exclusion for employers with under 50 employees. So if you have less than 50 and you feel complying with paying 2 weeks paid leave, or under certain circumstances paying another 10 weeks, and you don't feel you can front that money because it would put you out of business, there is an exception or an exclusion. It's just not really clear on how you go about yet applying for that. But the good news is anything that you pay, if you have an employee starting tomorrow and they are basically affected by the coronavirus, and there's about 6 different ways. I'm not going to, for the sake of time, get into every one of them right now, but there are provisions for you to pay them for 2 weeks or even up to a 10 additional. But you're going to get a tax credit for the employer taxes that you are paying anyways. So if it was business as usual, you're always paying the federal and state employer tax. So on the federal side, you can get a credit against the wages you've already paid to people. So you just basically you pay them the wage, and then when you file your payroll tax or have to remit that, you don't pay it. We haven't seen yet in our payroll system how we can even input that. So payroll companies, I believe, are under the gun right now. They have to be, to create a mechanism within their payroll system to allow people to forego that payment or track it, because right now in our system that we use, if we just skipped a payment or someone missed it or it bounced, it would sit there as something that was just open and unpaid. There has to be a mechanism to pay these and apply these properly, because I believe it's going to come through the payroll system as we're filing quarterly, and there's going to be some other forms coming out that we've yet to see. So I don't think when you apply for the 7A program that you will have to provide personal financial information like you would typically, because there is no personal guarantee. But this is a good time for everybody, especially if you're a business owner, I think, to be getting a little more on top of where things are at financially. We sent out a letter to a number of our dental clients because we were getting a lot of questions in that area about what should they do. And we can send this to our and make it available on our website as well. And it really entailed going over and making a 3-month budget for yourself on what do you need in your business while things are shut down or much slower, and what do you need personally. Because what you need personally, you are probably, if you're self-employed or an employee of your business, you're going to take out of your business. So figure out what your family needs are. Some people are getting deferments on their loans anyways. Talk to your mortgage company. There's a lot of questions out there, and these are bank questions if I don't pay my mortgage, what happens? And a lot of times they're going to just, from a couple of things I've heard, is let you skip payments, and they'll probably just accrue the interest onto your loan without penalizing you. That would be the same thing as what might happen with business loans. Talk to your landlord about getting, if you have one with your business, talk to your landlord if you need it temporarily until you get this loan. If your business couldn't keep paying the rent, about having maybe rent abatement. Just make sure you get things in writing, and before you do anything by just stopping paying rent without talking to your landlord, make sure you understand your lease and make sure that's not going to cause any legal problems or eviction issues for you. It's just important that you understand the legal side of this before you just make knee-jerk reactions. Let me go here. There's a couple other questions we've been getting, and I'm going to wrap up, and people can text in some if there's questions. Let me get to where that is. Okay. Okay. If you are watching, okay, I see some questions here. We'll get to that here in a second. You can text a question in on the group chat if you have any. So let me just maybe bring it back and summarize these two main loan programs. You can go get the EIDL. That may be just a $10,000 grant. It could turn into a much bigger loan that is not part of the CARES Act or the Payroll Protection Program loan, the forgivable loan. If all you do is get $10,000 and then decide all you're going to do is roll this, do the payroll protection program, the 7A loan, then that $10,000 or anything you apply for, there is going to be a provision, I believe, to roll that into one loan, and that might just become the 7A. But to my understanding, they can be two separate loans. They're two separate purposes. Just know that the bigger loan, if you go with it on an EIDL loan, it's not necessarily bigger, but if that was a disaster loan, that's not forgivable. Only $10,000 of it is potentially considered a grant. And when you go get your loan forgiveness, it will not, you have to spend that on qualified expenses. And that's what you're certifying when you get that. If you then go and you can't use those expenses as part of your calculation in figuring out what's forgivable. So there's going to be a little interplay on how you calculate this. But go to your bank, go to their bank website first. I think if you just call your bank, they're going to tell you they're not ready yet. Just make sure you know that they are a lender, that a qualified lender with the SBA, and then watch their website or send your banker an email and be ready to do that, or contact us and we can help you start getting ready. All right. Well, I'm going to answer a couple questions here. Okay. It was asked, what about the payroll I'm paying now before all loans? Well, the payroll you're paying now, let me go back here. If you've incurred payroll, it needs to be paid. There is an option. We can't just skip payroll if people have worked for you. But I guess I'm not, when we go calculate the payroll you are going to have going forward, starting tomorrow or whenever your pay period, if you have people laid off right now, then your payroll will shrink going forward if your office is closed. The intent is to be able to get this loan and slowly or methodically or immediately, if you can reopen, hire people back, get them back to work, get your sales and production going again. So this loan is meant to help you bring your business back online and give you the funding to do it. If you have payroll right now, that's then you're concerned that you don't have money in the bank to make it because things stopped. That's why we need to look at this EIDL, $10,000 grant. That might be the easiest way to deal with that. If I didn't answer your question fully, text me again. Okay, so one is a small business with 7 full-time employees. All make over $100,000 a year. You can still apply. It's just when you calculate the numbers, it's going to limit, I believe it's going to limit the calculations to just considering them as though they made $100,000 a year. This doesn't look like it's meant to keep every high salary going that a business might be making or might be incurring. So there is a $100,000 limit as you go back and do these calculations. The max loan is 2.5 average payroll, but is not based on other qualified business expenses. So if you bring everyone back on payroll and pay them 8 weeks, what is left over to pay the other qualified business expenses? Well, if you remember back in the calculation of payroll, this is meant to give you money to, let me scroll back up. Hold on, let me look here in my notes. So you can use the payroll proceeds. You can use these loan proceeds to pay rent and utilities, and keep your group health going and keep your payroll. This is really intended as to keep the core people, your employees, and your doors open, rent and utilities. If you have other expenses like office supplies, that doesn't count in this. So just don't spend money on that right now unless you have to. But hopefully for something like that, that would be a credit card, money in the bank you have existing. There is going to be managing this, but this loan isn't meant to just pay for every operating expense you might have. It's meant to help get people back to work. Okay. You recently received a business loan from a private bank. Does that disqualify me? No, to my understanding, that shouldn't disqualify you if you have another business loan. This loan, though, can help if you are now unable to meet your operating, those loan payments. You can't include your principal payments on other debts in this loan, but you can use it to pay the interest, and that interest will be included in your calculations. And so remember, this loan doesn't even it has streamlined underwriting. So people do have other businesses. You might have an existing SBA loan, or you might have a conventional loan for other things, equipment loans on your books. So you can use, when you get this money, that's why I said put it in a separate bank account and only use it for qualified expenses. And let's figure out together what those are based on your circumstances. But if you have other payments that you need to make that don't fit that, make them out of your operating account. Don't make them out of this account that's holding these proceeds. And that will help you keep things segregated and much easier to track. One question is, payroll includes business owners? Yes, payroll will include business owners, but again, there's that $100,000 limit. So in an instance where, let's say, we have some offices, let's say you have an operating entity that's an LLC, and the two owners each have S corps and own the LLC. and the owners are paying themselves out of their S corps. Everyone's working in the LLC. They have employees in the LLC. When you go get, everything's going to have to be aggregated together. This isn't, and then if you're paying yourself $200,000 a year out of your S corp, and you still are going to be limited on limiting yourself to 100,000 when you come and do these calculations. Doesn't mean you can't pay yourself more, but there will be a reduction as you look at what you can qualify for on the loan forgiveness, and how you pay highly compensated employees. Hope that was helpful there. I would encourage everybody, if you want, this is sort of, as I read these rules, it's somewhat of a on your honor or integrity position, I think, to read, like if you're going to apply for the EIDL loan, it's basically there for anyone that feels they're affected, and everybody feels affected by this. But if you don't need it, you can just apply for the bigger loan. And if you have enough cash in your bank and you don't want to go through 2 different loan step processes, you don't have to do it. If you're struggling, though, to wonder how you're going to meet certain payments, by all means, go get it, because the EIDL loan is supposed to be deposited once everything's done into your account within 3 days. And that's what the new online submission added, that it wasn't there last week. You actually put in your bank information. We're waiting to see how these get deposited. The bigger one, though, is really getting ready for the Paycheck Protection Program loan. And I really think everyone, and we here at Foresight CPA Group, we feel everyone should be probably applying for one of those if you've been affected, because at worst, let's say you went and got it and you didn't ever need it, you could just pay back the loan at the end. There is a 6-month grace period when all this ends. You could say, oh, I didn't need it. I don't want to have a loan that rolls forward. Oh, and let me touch on that. The loan that rolls forward, if you didn't get everything forgiven, goes forward, I believe, for a 10-year period at 4%. If you didn't want to have that, I mean, that's a really good loan, non-secured, no personal guarantee, no prepayment penalties. But if you didn't want to have that, you just take your proceeds that you didn't use and pay it off, and then there is no loan. And you'd have 6 months to do that after your 8-week period. I mean, you can figure out what you're going to be doing before everything kicks in. There's one other question, or a couple. Let me scroll here. Okay. Okay, we are making payroll now, but anticipate that business will slow down with greater travel restrictions. Do we have to cut our full-time employees or full-time equivalent employees in the first place to qualify? Or can we keep all FTEs paid if we time this right and still qualify for forgiveness? You don't have to cut everybody right now, but I'm looking at this as just a business decision, where if you don't have business going on, one option is to terminate employees that have nothing to do. Let them go make a claim with state unemployment and the federal amounts that will come in, and they can be getting something. Then, as you're able to return back up to full work or slowly phase it in, you're going to be paying these people back, or bringing them on and starting to pay them. If people can only come back half-time instead of full-time for a month, then there's going to be some calculation and determination there. But you don't have to, if you just keep paying your employees, there is still the look-back period where we just look at when you got your loan, what you're paying them, and if you were paying them the same thing a year ago, you, in effect, should qualify for that loan if you got it, but you would just be meeting that gap between today if you're paying them until you actually get the money, if you're not going to cut payroll by any chance. I hope that answered that question, if I understood it correctly. Then I bought my business in July 2019. Can I use the average monthly payroll for my 1099 contractor since July and multiply that by 2.5 to figure out the number. Let me think through that a second. So you bought your business in July of last year. So if you don't have 12 months, I guess I'm going to have to reread. I don't know if there's an annualization. That makes sense. But, or can you use less than dividing by 12 if you only started in July? Because I think the provision too is you can look at what you paid them this year. I'm going to have to get back to you on that off the top of my head. But there is a provision. You are not prohibited just because you bought your business July 15th or July 2019. If you just started your business a day ago, and you had nothing going on prior, then that doesn't seem to qualify. But you should be fine and get with whoever you work with at our firm or send us a separate email and we'll get with you on that, as I'd have to read more about that question. In applying, would our business automatically qualify for the loan? Well, I guess automatically, I think the banks are being asked to streamline this process again, and they're going to make it so that I don't think it's going to be very difficult to explain how you were affected. If you literally have had no effect on your business and it's business as usual for you, it doesn't sound like this loan was meant for your company or this program, but it can't hurt other than time and effort to go through, because if you get it, you are signing that you've been affected by the loan. You're not providing a personal guarantee, but I think the banks and the SBA will make that decision. So I don't know how to answer, will you automatically, just by qualifying, automatically get it, automatically qualify? I think you'll get it if you apply. Okay. To summarize, it can be used to meet the EIDL and the, okay. Oh, this is a good question if I'm understanding what they're asking. If you get the Paycheck Protection loan and you are using it to pay for people's employment under the Family First Coronavirus Response Act, I believe that will qualify, but what won't qualify in calculating your wages is there's also a provision if you're paying for people right now and are struggling with cash flow and you elect to then defer your tax payments, because there's also a provision in this law that lets you defer your payroll tax payments and not pay them till the end of next year and even into 2022. Those are not included because you didn't pay them. You have to be paying the payroll tax as you calculate your look back period. You have to be paying payroll and paying for the cost of that payroll as you satisfy your loan forgiveness. So to me, that would, and I'll go back and look, we're going to look at this in every individual situation. More people, I guess, are logging in all of a sudden. If I'm a subcontractor, is there something for me if I can no longer get contracted work? Yes. If you are, this is meant for sole proprietors or people that are freelancers, and you should apply for, at least for the EIDL loan, and then you get a look at what you made individually if you're just on your own for this payroll protection program. It should count for you. You just won't have employees, but it's what you were paying yourself. And it really depends on your payroll and other benefits you're paying to stay afloat. Okay. The payroll protection program, the PPP loan, is not through SBA, but my bank. A good question, or about a credit union. Some credit unions, if you're with a credit union, I don't think a lot of credit unions are are on this level of being able to take on this SBA program. I would ask them. I asked my credit union because we have a bank and a credit union that I've used here, and it's only our bank that is a qualified SBA lender. So to the question though, this loan you have to apply through a bank, a qualified bank, or a qualified credit union if they are doing these, which you have to ask them. But it's through an SBA submission, just like the original 7A. This is just a streamlined process. So it does go through your bank. So make sure you talk with your bank and get that set up. Let's see. Okay, it's about 2:30. I wonder if some people are signing in now. For people that are logging in right now, hopefully we're not on a time zone difference because it is 2:30 here, and maybe they were signing in at 1:30 in California or on the West Coast. We are done, but we'll have a recording of this, and you can help us or contact us directly if you have other questions. One thing we wanted to point out that we have had some clients ask, as you're looking at your books and records and trying to maybe understand them better, we are hosting on April 18th a QuickBooks online webinar. It's free. You can get online for that, go to our website, and you can sign up. That would help you understand. You can run your own reports and look. If you haven't been doing that and you've been relying on us to help get that ready, and you want to learn QuickBooks Online better, I would encourage you to sign up for that. Josh Statz will be hosting that, and I think that's everything. If there's not any other questions, hope that was somewhat helpful, but in helping understand these two different loans and when and how to apply. So hope everyone has a great day.